You were listening to chartingwealth.com for Tuesday, the 15th of August, 2017. We see that stocks, the S&P 500 up for the day about 1%. The Qs, that's the NASDAQ 100, up 1.29%. TLT, the 20-year bond, down 0.15%. And gold down 0.73%. Let's dig into these charts and see what's going on. We, of course, have a weekly crossover going down. We had our original crossover going down all the way back on the 23rd of June. Market went down for a couple of weeks subsequently, then went up for 4 weeks running and ended the last week down. We had a laminated blue and red, basically the price percent oscillator over the signal line for about 3 weeks running. And then when it separated again, as we told you, we went ahead and called that another weekly vertical crossover, and we'll make it official by laminating the 2-day over the gold weekly signal line. And what we have is, of course, a weekly vertical crossover going down. We saw the week start off with the derivative oscillator also crossover going down. Let's zoom in a little closer to the 2-day chart. We can see, of course, on the 11th was the big crossover going down. That was on Friday on both the weekly and the 2-day. We saw on the 2-day chart, we had a big red candle with the crossover on the 2-day chart, and we also had a big red switchover on the derivative oscillator. It also flipped at the same time. If we zoom in a little closer to the 4-hour chart, what do we see happening? Of course, the 4-hour chart shot down until late in the day on Friday, a little bit up at the end of the day, and then, of course, on Monday, took off moving back up again, sort of digested all that weakness and then sort of rebounded in that regard. If we look at how things were throughout the day, particularly that 10:30 hour, it was not a jumping in point. Those of you who were trying to use our standard jumping in, we always say look at the 10:30 chart, see where things are, was not an entry point then. So again, stay tuned to your 4-hour chart and to your 2-hour chart. Looks like we have a pullback going on. And of course, we can see that the chart is moving up. Once that pullback ends, and it's the same, the pullback is already underway, actually, crossover going up on the 2-hour chart. Continue to watch. You'll have alarm bells going off on any kind of entry if we start penetrating the 2-day downward trend line. So again, watch those things as we move forward. We'll continue to keep you posted as we watch and see how things develop in this market. Let's go back to our weekly chart. We'll take a look at the Qs, that is QQQ. Of course, it's been in a confirmed down move since the 16th of June. And went down for a few weeks, then up for about 3.5 weeks or so. And we see it started off this week. Again, we're in a confirmed down move. Derivative oscillators continuing to lose downward momentum on that weekly chart. As we zoom in a little closer to the 2-day, we, of course, had a 2-day vertical crossover on the 11th. That again was on Friday. Same thing we saw going on in the S&P 500. Bit of a recovery on Monday. Derivative oscillators continuing to gain downward momentum. And of course, our PPO price percent oscillator is down. As we look a little bit closer into that 4-hour chart, what do we see? We see a pullback underway. Let's let that complete, move back over. And once it crosses back over going down, of course, that would be our trigger. So we'll let this pullback play its way out. And again, if it's a strong enough up move that it pulls away and there is no trade, then you know what? There's no trade. But we are primed and ready for one. And we will continue to keep an eye because we have both our weekly on a confirmed down and our 2-day. So we'll wait for that 4-hour to pull back. That is going the opposite direction, move back over going down. And that'll be our trigger to jump in on a Q's down trade if it occurs. Remember, we're not forecasters, my friends. We are trend followers. Let's move on. What's going on bonds? Bonds, of course, had a strong up week on the week ending the 11th. Bond movement is still above the weekly trend line moving up. We, of course, had, as we zoom in on the 2-day chart, we had a weekly vertical crossover on the 2-day chart moving up. And in fact, we want to go ahead and reposition our arrow to make sure that it reflects an upward movement. And we had on the 11th, again, that 2-day candle ending on the 11th, nice up move. And if we zoom in a little closer to what's going on our 4-hour chart, we can see that we had a 4-hour crossover there on the morning of the 9th, Wednesday the 9th, then up movement all the way through the end of the day on Friday, and then a bit of a backing off. So we are waiting to see as bonds roll back and again recharge for further up movement once we do have that crossover after the pullback. And again, remember, the pullback on bonds is going to be a little different than the pullback on stocks. Stocks are primed, it appears, from our vertical crossovers going down to go down. TLT, that is 20-year bonds, are primed to go up. Remember, they typically move inversely to each other, stocks versus bonds. So we are waiting for the rollback to occur, and then when things correct and start moving up on either that 4-hour or that 2-hour chart, whichever is your preference, we already have a confirmed down move on the 2-hour chart. And remember, though, whenever you're dealing with smaller charts, they're more likely to give you false warnings of movement in whichever direction because they're smaller charts, they're smaller waves. All things being equal, the market always tends to move in the direction of the biggest chart, but you've got to have a trigger, right? You've got to have a trigger to pull. And again, the 2 or the 4-hour is satisfactory, and I encourage you to practice on each of them. So we're waiting for this pullback to finish and for the 4-hour chart to start moving in the direction of the up move on both the 2-day and the weekly. So that's where we are as far as bonds go. And let's take a look. Let's take a look at our weekly chart on the last chart we're going to review, which is gold, down 0.71%. Now again, we had a weekly vertical crossover for the week ending the 11th on gold, moving up. Gold, of course, has had nice, strong movement for what is this going on now, 6 weeks of up movement. We just saw with the week ending the 11th, the switchover from the derivative oscillator from red to green. Now, if we zoom in a little closer to the action, what's going on the 2-day chart? Of course, we had that 2-day crossover all the way back on the 24th of July. Gold went up for several 2-day increments until around the 3rd of August, where it digested maybe some gains and then started shooting up again on that 2-day candle ending on the 9th. Then again on the 11th, where it was strong enough to switch over the weekly chart. And then we've had a bit of a pullback in gold. We can see on that 4-hour chart that things are starting to back off after gold hit its highest of highs in recent memory back on the afternoon of Friday the 11th. So we are waiting for gold to again adjust to that. And for there may very well be a crossover going down on that 4-hour chart. Haven't seen it yet. We will continue to watch for that. Those of you who jumped in on gold on just the crossover on the 4-hour chart, again, watch this 4-hour chart, pay attention. We've seen it bump off that red signal line quite often over the last few weeks. It may very well do that on an up move, but don't lose any gain by allowing it to cross over going down. Remember, this 4-hour chart on gold is a total trading chart, and it is a beautiful chart for helping you figure out when to get into gold and when to get out of gold. That, my friends, is where we are on Monday at the end of the day on the 14th of August as we go into Tuesday the 15th. We'll continue to watch things, see if indeed stocks have peaked for a while. Again, we're ready to pull some triggers if indeed those incidents occur where we have, after a pullback on that 4-hour or 2-hour chart, a crossover going in the same direction as the weekly and the 2-day trends. So it's easy enough to see We just have to have all the stars align for us. Thanks so much, my friends. Let us hear from you. Feel free to write us always at cw@chartingwealth.com. And if you've not already subscribed to our daily market review, why not? There's so much good free stuff you get with it. And the operative word there is free. You get our How to Read a Stock Chart video. You get the layout that we use at freestockcharts.com. We tell you how to set it all up there for free. We also share with you our daily market worksheet, our weekly market worksheet, and our trade worksheet. If you want to get good at reading these stock charts, then you need to practice every day. 10 minutes is all we ask. God bless. All the best from all your friends here at chartingwealth.com.